Why do Europe's most promising startups keep, packing up and fleeing to the U.S.?
Right, it's a huge issue right now.
Welcome to your custom deep dive. Today, we're opening up that stack of financial research and policy papers you sent us regarding a new political coalition called the E6.
Yeah, that's Germany, France, Italy, the Netherlands, Poland, and Spain.
Exactly. And our mission today is really just understanding their aggressive push to establish a capital markets union.
Yeah.
So, okay, let's unpack this. How could changing the way everyday Europeans save their money actually fix the broken financial plumbing that's causing this corporate brain drain?
Well, to get to the bottom of that, we really have to look at the specific hurdles in your notes. As you know from your research, the traditional European bank lending model, it just inherently chokes off high-risk venture capital.
Which leaves what, public markets and private equity?
Right, but those alternative paths are, they're completely shattered across the continent.
Oh, really?
Yeah, a startup in Latvia, for instance, is going to seriously struggle to legally and efficiently take venture capital from Poland.
Right, looking at your notes, it's honestly like trying to play a giant board game where every single player at the table is using a completely different rulebook.
What's fascinating here is how the public markets illustrate that perfectly. The EU currently operates over 30 separate, mostly redundant stock exchanges.
Wait, 30? That's insane.
Yeah, and many haven't even seen a new company list in years because the local regulatory friction is just way too high.
Right.
Compare that to the U.S., which is completely dominated by two highly liquid giants. The New York Stock Exchange and the NASDAQ.
Right, the big ones.
Exactly.
Yeah.
Those two alone have market caps 5 times larger than Europe's biggest pan-European exchange, Euronext.
Wow. Well, that explains why a founder would just throw their hands up and move to Silicon Valley.
Yeah, you can't blame them.
But here is where I kind of have to push back on the E6's proposed solution. I mean, you're talking about merging these 27 segregated pools of capital into one unified market.
Right.
But we are dealing with 27 sovereign nations here. They have completely different bankruptcy laws, tax codes, shareholder rights.
It's a mess.
Right, so you can't just spend 4 decades rewriting local laws and expect startups to wait around. Is this capital markets union just a political pipe dream?
Well, if they actually tried to harmonize 27 separate legal codes, it absolutely would be a pipe dream.
Yeah.
But what's fascinating here is the mechanism they are proposing to bypass that exact gridlock. Your research highlights this concept called the 28th regime.
Oh, right. The one European Commission President Ursula von der Leyen branded EU Inc.
Exactly, EU Inc.
How does that actually function on a legal level, though?
So instead of forcing Germany, France, and Spain to, perfectly align their national corporate laws, the EU just creates a 28th parallel set of pan-European regulations.
Oh, I see.
Yeah, it's a standardized corporate structure that companies can voluntarily opt into.
Okay, so if a startup incorporates as an EU Inc., they are governed by this single, unified code for things like cross-border insolvency and prospectus rules.
You got it. They entirely bypass the local bureaucratic maze.
Oh, that makes so much sense. It's less like trying to repave 27 different national highways and more like giving companies, a universal adapter.
Right, a universal adapter that plugs into any investor's portfolio across the continent.
Which is crucial because of what it plugs into, right? Idle cash.
Yes. If we connect this to the bigger macroeconomic picture in your sources, European households hoard about 35% of their financial assets in cash, or just basic bank deposits.
35%.
Yeah, it's huge. In the U.S., that number is under 15%, mostly because Americans actually invest their savings in those unified capital markets.
So what does this all mean for you, or listener? I mean, if you're doing business or investing in Europe, this is a massive shift.
Huge shift.
The ultimate goal of the capital markets union isn't just to make paperwork easier. It's to unlock that massive vault of idle European savings and just funnel it directly into this newly unified market.
Exactly. The E6 is really racing to build a truly borderless pool of capital so that European money can easily fund European innovation.
Rather than watching those startups and the potential returns just flee to the U.S.
Right. They're fixing the plumbing to compete with American financial dominance.
But that leaves you with one major lingering question to consider.
What's that?
If EU Inc. succeeds in creating this totally frictionless flow of investment across Europe, what actually happens to the smaller member states?
Oh, that is the big question.
Right. If capital can travel anywhere instantly, does all that wealth naturally drain out of local Polish or Latvian economies? Does it just pool strictly around the biggest players like France and Germany?
Yeah, if you fix the plumbing, you still have to wonder where all the water's going to end up.
Exactly. Something to think about. Thank you for joining us for today's deep dive.